Hey everyone, I'm Robert Lindstrom, founder of Provision Financial Planning. And I'm doing this short video for a few reasons. The first one is I've gotten more and more requests recently for a sample plan. And I have put one together. We're going to sort of go over that today. But I think it highlights a misconception out there about financial planning because a financial plan just done one time is really a snapshot in time. So it's accurate for a little while, but as your life changes, what you desire out of your life changes, tax rules, retirement rules change, markets fluctuate, you kind of have to stay on top of it and adjust your plan. So that's one. I think there's some other misconceptions out there as well because traditionally the financial industry has been very transaction based. So a lot of free plans out there that are followed very quickly by a pitch for some sort of commission based product. And then there's a lot of other advisors out there that just do investments. So I also hope this video can highlight what financial planning really is, at least the way I do it. And that's going to be what we're going to do today. So let's get started. I have a 3-step process to becoming a client. So first step, get your one-page plan. And this is the first meeting we would ever have. It's before you become a client. It's an intro meeting and a very high-level discussion on your current financial situation. I'll share my thoughts and observations in case it's helpful. But really, the two other primary purposes are, the first one, it essentially serves as kind of a proposal, kind of lets you see what the actual things that we would be working on together is. But also, and maybe most importantly, it's a process where you can use to evaluate whether provision financial planning would be a good fit for you or not. So that's all before becoming a client. It's an intro meeting. And then after that, you would decide to move on or not. Step 2, if you decide to move on, is get a comprehensive plan. And that's pretty much what we're going to talk about today. Step 3 is get going, and that's where implementation happens. And we'll talk a little about that. But let's get going. So you've gotten your one-page plan. You decided that you did want to move forward and get a comprehensive plan. I will send you a link to this software. This is the core of our relationship together. And it's for you to fill out your profile. And that's basically what you're looking at here. I've already done it, so the screen will look a little different when you first log in, but it's these same areas. I just went ahead and put all this info. It's hypothetical. This is not a real client. I just threw it in so we can kind of go through the software together. But you'll have the chance to build out your net worth. The easiest way is to hit this link account button, and you can actually sign into your various financial accounts securely. That's the easiest way. If you don't want to do that, or sometimes not all financial institutions can be done like that, you can do it manually. So, you've got banks, credit cards, investment accounts. You just click on here, click property. You would enter in the information as best you could, but don't worry about getting any of this perfect because we're going to be going through it together and we're going to make sure that it's in there as accurate as we can get it. So do not worry about getting in here perfect. Just get in as best you can. And if you prefer, even easier way, you can click these 3 dots up here and go to the vault and upload documents. And then I can put them in here for you. So whatever is easiest. The point is we just want to start building out your profile. So that's the net worth tab. Moving on to goals, you can see a couple of default cards here, right? Age is something, retirement spending is another one. I know a lot of people are probably going to be coming to me to help figure these out, and that's fine. So just put something, it doesn't matter. Just get something in here. We are going to come up with those answers together. And there's really the key here. There's a lot of other goals, right? You probably have other things you want to do. Maybe you have certain vacations you want to take. You want to make sure you're covered for long-term care. You want to buy a second home. You want to pay for college. You want to give gifts, whatever it is, doesn't matter. Put them in here and we're going to go through them together. Then we've got some more data to put in: income, some salaries from Social Security. If you haven't done this yet, then you can get an estimate at ssa.gov. I encourage you to do that. Regardless, make sure it's accurate and also to kind of know what to expect. There's other types of income you can put in. I have put in a self-employment card here. That'll make more sense in a moment. But I think because of demographics and technology, I think more and more people will have the opportunity and want to have some sort of self-employment or some other method of easing into retirement. So we'll talk about that more in a moment. Move along here. Savings, this is not what you have currently saved. This is what you are saving on an annual basis. So in this example, we've got the client saving 18% into their 401k, and each of them are maxing out their Roth IRAs. So whatever you're doing, that's what you would put here. Expenses. This is, you can put whatever it is in here. You got to put something. If you don't know, you can use this worksheet here, kind of help guide you. But there's an even easier way. If you link accounts, it will kind of do it for you. If you link your bank account, your credit card, it'll kind of categorize for you. But you got to come up with a number. Let's get that in here. Save that. And then we have to make a few other assumptions. Based on where you live, the software does factor in the state taxes and federal as well. So if you have a local tax, you need to put that in here, various other assumptions. And then the last part of your profile, again, this is all done before our first meeting, after the one-page plan, but before our first comprehensive meeting. We got to get your birth date in here because that drives a lot of the analysis. State is pretty self-explanatory. And then planning horizon. This is how long you expect to live. And generally, we don't want to go below 90. And 95 is a good number. 100, some people prefer. It really kind of depends on your specific situation, your health, your family history. But we got to start with something. And then you can put any other family members in here as well. So you do all that. Again, do not worry about getting it perfect. Get it in as best you can. And that's going to be the primary focus of our first meeting. We're going to go through this together. To make sure it's accurate. Garbage in, garbage out. We want to make sure we're working with good numbers. But it also helps me learn a lot more detail than we did in our one-page plan meeting about your financial situation. So I can get a little better handle there. And then we go to this retirement tab. And so you can see if you change nothing, then you would be expected to be able to, with a 67% chance of success, retire based on all those things we just input without running out of money by age 95. That's what that's saying. It's really a 1 in 3 chance of having to adjust, right? Most people, you're not going to just do this plan and never look at it again or never change it. So if you see that there's a higher probability of having to adjust at some point in the future, you probably would make that adjustment. But we go down here and we have all these different toggles. So let's say in our meeting we were talking and you're actually spending $6,000 a month now because we didn't account for one thing. We've looked at your investments and we agree that we're going to change them a little bit already. So we put that in here. Your Social Security strategy can be changed. You decide you really are okay retiring a little later. You like your job, so we'll bump that out. But we also want to spend $7,000 a month. So let's see what happens. We hit refresh, and that changed it pretty drastically. So now there's a 1 in 2 chance that you're going to have to adjust at some point. So we keep doing this over and over, and we kind of arrive at your final allocation. You're like, well, maybe I'll work a little longer. I really like what I do, but I can also save more. So let's save 15,000 more a year, maybe bump the 401k up just a little bit. And we'll see what that does. So it bumps you up to 70%, a little higher, but about the same as you were earlier, but with a little different scenario. You're spending more now, but you're working longer. So the whole point of this first meeting is to just kind of play with this to really make sure you have a full understanding of the trade-offs involved, the various trade-offs available to you. And you can kind of tell this is a very collaborative process. I am not just saying, all right, here's your plan, here's what you can spend. We're going to be doing this together based on what you want your retirement to look like. And by doing that in this first meeting, you'll kind of understand what's possible. We're not finalizing anything in this first meeting, but your homework is to go and really think through what we've talked about. You're going to really think about this and kind of come up with some more changes you'd like to see. I would also at this time, if there's any more documentation we needed, I would ask you for that. And then I have, in the meantime, before our second meeting, I have a due diligence process in place to go through all the documents you've uploaded, make sure all of this looks right, make sure this all looks how we want it to look, to make sure our analysis is reasonable. So we then reconvene for our second meeting. And in this second meeting, we're coming right back into this tab, and you're going to say, we talked more about this, and we really, I don't want to work till 70. I only want to work an extra year. We're okay spending a little less than we were. What does that do for us? Okay, well, 53%. Maybe you're okay with that. Maybe you're not. That's basically saying there's a 1 in 2 chance you would have to adjust at some point. But you may also say, well, we're okay investing a little bit more aggressively as well. And we take a look. And maybe that's where you arrive at your final initial plan, right? So we have to finalize your initial steps forward, but we're going to review this over time. And this is saying there's a 40% chance you would have to adjust, assuming all these things happen how we want it. Some people are more conservative. They'd rather see this number up above 90. So like, you know what, I'll work. I want to make sure we're good. I'll even work a little longer. Let's get that number higher. 97%. I would say that's too high, but again, it's not up to me. It's up to you. What probability do you want of knowing you're not going to run out of money? And so that's the primary focus of the second meeting, arriving at your final initial plan, I guess, an oxymoron way to say that. So we do that, and then we look at some of the other areas of this software. We can look at the stress test tab. It's kind of neat, shows you where what risks you should be thinking about, right? If taxes, let's see what it says. If taxes go up 20%, you still have an 89% chance of success. So like you can see here very quickly, the primary risk, as it is for a lot of people, is if Social Security benefits are cut, that would have a significant impact. And that's true for a lot of people. We also have this dashboard tab, shows your net worth, detailed net worth. But this was what I wanted to show. This is the budget tab. There's nothing here because I don't have any accounts linked, but if you link your credit card and your bank account, then you will be able to see, it'll automatically pull in the transactions for you. I won't be able to see your transactions. You can share it with me, but no one ever does, nor do I ask for it. But I will see categories. So it'll aggregate all your spending and say, all right, you're spending X amount on groceries, but it won't show me individual transactions. But it can be helpful as we kind of formulate what you're spending now and what to expect in retirement. Another thing in this next meeting is I'll go back. What we're really, the most important investment decision you'll make is your overall stock to bond allocation. So that's this 80% stocks, 20% bonds. In this example, yours may be different, but that's the most important decision you can make. But by looking at this investment tab, you can see in this example, they're pretty similar, 64% stocks versus 60. So overall, pretty similar. But when we look behind the curtain a little bit, we see a different story. So in this example, again, I just put these together, but the large cap is overweight, and it's mainly to the detriment of these international stocks. So in this example, there's an opportunity to increase diversification. And what that can do is the theory behind it is that it can give you a similar overall return with less volatility, which is generally a good thing. So that's we would also look at that. You can see some other tabs up here. I don't really use this software for these other tabs. Tax I do a little bit, but mainly just to illustrate. So in this example, you would favor traditional retirement contributions over Roth because the tax rate's higher than it's expected to be in the future. And it can also help a little bit to illustrate Roth conversions may be beneficial, or coordinating your withdrawal strategy can be beneficial. But I don't use this to make decisions. I have a separate tax software, projection software. But these other areas are still covered, just not in the software. And that's where we come to the sample plan. So after the second meeting, we've kind of finalized the retirement aspect of things. I then go back and review all the other documents we have. So even though we didn't do it in the software, you do get tax planning recommendations. You do get investment recommendations. You do get estate planning recommendations. Same with insurance as well. So these areas are still covered, and that's in this commentary that you get. So the sample plan, right, the PDF, it's that's what it is. It comes with the commentary first, the action items we decided on together, and then an entire report of the software. So that's here. It's extensive. But again, that is a snapshot in time. I think that, the three primary things people want help with retirement are sort of an ongoing thing, right? So taxes, you want to lower taxes. I haven't met anyone yet who doesn't want to lower taxes. And that's an ongoing annual decision because your income can fluctuate, the tax rules change, the tax rules fluctuate with inflation. So that's an annual decision. It's an ongoing thing. Same with investments. You can come up with an initial allocation, but the markets are going to fluctuate. So you need to rebalance back. So that's an ongoing thing as well. But the really big one is back to this retirement. Let's say, our initial plan forward we agreed on was 88%, and we come in a year from now, and for whatever reason, this is down to 70. Well, now you at least know that you have a higher chance you may need to adjust in the future. So you can choose to go ahead and adjust now and spend slightly less and bump this number back up. That's going to be an individual decision, but by carefully monitoring what these percentages say, that we can drastically increase the chances where you do not run out of money. Your income continues from your nest egg. So you've gotten your one-page plan. You decided you wanted to get a comprehensive plan. We did these 3 meetings. You got this output, this plan, and the third step is to get going. That's where we implement. That usually involves the investment management piece, but it also can involve getting certain insurance coverages. It can involve getting estate documents. And I don't do those other things. I'm a fee-only advisor. The only compensation I get is from my clients. So I don't sell insurance or mutual funds or annuities or anything like that. But I have a network of people that you can use, the people that have helped clients in the past implement those. And I can assist. I just can't do it for you. So that's the comprehensive plan, the implementation. But I think maybe even more important is I have a structured process in place that I call a service calendar, where it's a systematic way to make sure we are monitoring all of these different areas and updating them as necessary, whether because something changed for you or something in the regulations changed or whatever it may be. But I have this process in place, and that's how we make sure that this probability stays appropriate for you. Your investments stay appropriate. We're taking advantage of any tax opportunities. So that's why I think planning is more than a plan. It's more valuable than that snapshot that we talked about at the very first part of this video. But I also think that most people hire an advisor to reduce their complexity, reduce the worry around some of these decisions, save time, but really evaluate trade-offs. And the best way that I know how to do those things is to help you make better decisions. And I think there's two takeaways from that. The first one is I believe that life decisions are financial decisions and financial decisions are life decisions. And by doing this collaboratively, we're able to bring those two together. And I think that's important. But I also think this process and then the ongoing monitoring process of financial planning is an incredible tool to help you make better decisions and feel more confident in making those decisions. So I think there's some value in the investments. There's a value in the planning. You save some time by working with an advisor, but I think that really gets to what is truly valuable. And if any of this sounds like it could be beneficial and you haven't already, again, the first step is to get your one-page plan. It's an intro meeting. You are not committing to anything at that time. And you can schedule that on the website, provisionfinancialplanning.com. I hope this is helpful. I hope it helps you understand the process a little bit better, but also helps you understand what exactly financial planning is. And I thank you for watching.